Okay, and in one very big way, I'm happy that I'm not taking this trade because it goes against my goal for March to only trade the moving average trend line breaks in the direction of the trend, not a counter trend trade, which is what I was so tempted to do right here, uh, to get in when the trend line broke. It's been moving straight up nonstop since, early this morning, and it hit an order block area and it tipped right over the top of it, barely ticked over the top of it. You can see that right here. It ticked right over the top of that dash line and started to come down strongly like that. And right here, when it came up to this trend line, the second trend line came back up and hit these moving averages that have finally crossed, and it started to turn red. I circled it and I said that'd be a great place to enter on that candle. This is where I would have entered. Stop loss would have been above that pintail. And I was thinking, why didn't I take that trade? Well, I didn't take that trade because I want to master this technique for the month of March. What? Moving average strategy, where I'm trading in the direction of the moving averages and I'm waiting for a pullback. I'm trading in the direction of all the moving averages and I'm looking for fair value gaps right here, trading in the direction the price had come up over the top of these moving averages, and now I'm waiting for a pullback into a fair value gap or some kind of structure or liquidity sweep in the direction of all the time charts going in the direction. That's my goal. Is it sensible to take a trade like this? Yes, if it's on my playbook, if it's part of my plan, and it is, and it will be. But for the month of March, I have chosen not to take any trades other than the moving average trend line ICT strategy that I have. I know that's a mouthful. Moving average trend line ICT strategy. And it does not incorporate a counter trend line break strategy in resistance yet. That particular strategy does not allow that. That's the only strategy I'm trading. Now, if I can succeed at not trading outside of that goal for this month, I will have reached a level of maturity that I've never seen, because you don't know how bad my video game mentality wanted to just jump on. This is a demo account. What, to treat this like real money when you have a demo account is another sign that you're getting more and more ready for the real deal. Treat it like it's real money. And the fact that I really believed with all my heart this was definitely going to get a nice move down, and it did. I have to not take the trade because of my goal. Keeping the goals that we have is the only way to move forward. And like I said, I know that I can take this trade in the future. I know it's going to be part of my repertoire and my weapons. But when you make a goal and you have to accomplish that goal, you really do, or you're never going to do good. When you're using a demo account, you have to treat it like real money, or you're never going to do good. So I am going to make a note video here and put this in my journal that as long as I don't break it by the end of the day and I don't snap out of this, shall we say, self-control and focus, this is going to be a good day. I can tell, even if I don't take a trade today, I've already won. I've already succeeded by the grace of God. All right, just an important note, just for my own understanding as I learn more and more about trading, the ICT fair value gap. Yesterday was that huge move down. Remember that huge move down yesterday? I mean, I was trading with some people that were buying and buying and buying all the way down, and they just couldn't take it anymore, and they had a massive loss, right before it bounced back up, really. But I was holding off. I'm not saying I'm smart, and I'm not saying I'm better than anybody. I'm just saying that the trend lines, the moving averages will helping me stay out of the situation. I'm not saying I always use moving averages, but when everything on my time charts, all my time charts are pointing down like this, here's a fair value gap, for instance, that failed. And it might have been that I would have bought right here on this test right here. All right. But the thing is, you put your stop in a reasonable spot. And when it fails, you get out. I mean, you don't keep adding and adding and adding, right? Now, when it finally was ready to turn around, what was the turnaround sign? Well, a double bottom, fair value gap reversal. Look at this. Textbook, actually. Here on the 1 minute chart, you can see the double bottom, change of character, test the fair value gap, and then it never looked back. Okay. Now, having this happen at key areas is pretty interesting. Came all the way back down into this order block here almost perfectly. And seeing that, if I had seen that and paid attention to that, I was already done trading for the day. This, I was thinking all day long, when can I get in on this thing? Where are the support levels? I mean, at each level, you're thinking, okay, if we're in a bull market, this is just pulling back. Well, I should be able to get in this somewhere. You know, I don't have a problem with buying at pivot levels on the way down and trying a trade. For instance, like I said, this trade right here on the 1 minute chart was a good, valiant effort. Sure, if it was at a liquidity sweep level on a higher time chart, if it was at a support level, a structure at a higher time chart, and it put in this kind of double bottom fair value gap attempt, right? If it did that, I would say this is worth a try. It just doesn't work until it goes down to where it's finished sweeping liquidity. As that happened up here, and it wasn't done with this level here, these little levels here yet. Okay, so I'm just doing this for my own sake to learn. I really wanted to jump in this yesterday on the way down. I really, really did. Here's the 15-minute chart yesterday. On the way down, I really wanted to get in somewhere. So I was watching, especially in this area where this dash line is, because that is an area of some kind of weekly or daily. It was a couple of days pivot level. That's right. That's what it was. A couple of days ago, there it is right there. This was the level of 2 days ago. That's where it bounced and went up 2 days ago. That was the low. So I was watching that area thinking, would this be a good area for me to try and get in there? And that's over here in this area right here. Let's see what we got here. Where's that white line at on the five? Okay, so it's below. There it is. It is below, if it happened up here, once it broke below that though, then you see these attempts to go up, and you see this fair value gap situation put in. I see, some people might think, okay, this is still within a range, within an area of a major swing level. And giving this a try, I still think when you got your stop loss in the right place, I think it's worth a try. Sure. But it's below and consolidating below to me, a major swing level. So getting in down here when it's for the first time after all day waiting might have been more appetizing, but we only had a half an hour left, and I wasn't watching the chart. And I don't know if I would have taken a trade with only 30 minutes left anyway. In fact, by the time this happened, you had 20 minutes left of the day. So, I don't know about you, but I'm not taking a trade with 20 minutes left necessarily, okay? But, okay, so what is this video about? This video is about paying attention to the direction. Honestly, you got to pay attention to the short-term trend also. A long-term daily trend and an hourly trend is not your friend on a 15-minute chart, on a 5-minute chart, okay? So the 15-minute chart crosses under, massive moving average directions. These, you don't trade with these necessarily, but they do tell you, hey, it's probably time for a liquidity sweep down below, and you might want to consider going down, or at least not trying to buy on the upside right now, okay? So that's why, one of the reasons why I do like the moving averages on my 10,000 tick chart, which is the same as the 15. As soon as these price drop below here, over here, I'm buying all day long. Absolutely. And I'm looking to add when it drops down 50% of this spike up, and right here, I'm looking to add when it bounces and creates a bullish pintail and it fills in a fair value gap over here. I'm looking to buy like this. But once price drops below these moving averages, I'm looking to stop buying and wait for it to hit support, looking at what it does at support, and possibly putting in a trade once it sweeps liquidity. Like I said, this liquidity sweep right here was the only time during the whole day, right here, over here, When it swept and went back up right there, let's take a look at that. When it swept and went back up on the 15-minute chart right here, this could have been some kind of trade opportunity. Okay, let's take a look at that on the 5-minute chart. So here's where it happened. It swept and went back up. And quite frankly, on this 5-minute chart, or is it the 1 minute? This is the 1-minute chart. Let's see the 5-minute chart, what happened over there. Okay, here we go. Right here. It swept. It looks like I did do some trading right there, because that would be the only time for me to have a trade. And it looks like I did buy and sell higher. Oh, I was trying to short. I think this is where I did one short up at the top. And I did one fair value gap trade to the short, and it just stopped me. It kept going up. So right here, you see this fair value gap. I was looking to go down and not up. But here's the fair value gap right at that line to the upside. Here's a little fair value gap that when it came and tested it over here, it did bounce. But it bounced up into a downtrending force. Okay, so maybe some scalping would have worked right here. This could have worked with a good hand, with a good sharp eye and quick reactions. Probably could have bounced off that fair value gap, or at least broke even when it came down. Me, I was on the short side the whole time. You know, this fair value gap was my short, and it didn't work on the first one, so I created a trend line. And when it broke the trend line on the second trend, I went short. But this is the area to take a trade for me. If I was going to try to bounce it long, in this area would be the trade to try to go long. And there's nothing else. It has to sweep something. It has to sweep something, right? And when it did sweep, it came back up and created a fair value gap. There you go. That's an idea, but I was already in the shorting mindset. And you can't take a long and a short in the same mindset. You have to be on one side or the other. And I was on the right side, and the second trade did work. But the problem is, what is the problem? The problem is that fair value gap short got me. All right, so what am I trying to say in this video? I'm trying to say, thank God I didn't try to buy it yesterday when it was going down. And thank God I was paying attention to, the higher time charts, but also noticing that the lower time charts were going down. 15-minute time chart is the way to follow. It really is. And that's the 10,000 tick chart, if you're wondering. This is the 10,000 tick chart. It's almost the same as the 15-minute chart. 15-minute chart gives you kind of the same area here. All right. And when these moving averages cross and price goes under, I don't care if it's a daily, bullish. I don't care if the 4-hour chart's bullish. I don't care if the hour chart's bullish. I'm not going to start buying when this is crisscrossing over right here. Okay, when it does some kind of reversal today, I'm interested in seeing what happens. Everything's going up now. All the time charts that I'm watching, including the 15-minute, and let's see, I think maybe even the 60-minute. Yeah, even the 60-minute price is back up over the 20 and the 50. So when price drops below the 20 and the 50 on the hourly chart, you better hold up on buying. You better hold up on buying. You really, look at this fair value gap right here that was just completely disrespected, right? And, there's power in the moving average. There really is. You don't have to get a pinpoint perfect entry, which you can do sometimes with the fair value gaps. But I'm telling you what, when all the time charts say that price is under the moving averages, you better beware. You better beware. All right, so that's what I wanted to say on this video. I'll see you next time. God bless. Peace. All right. What I'm doing here is I'm waiting.
Welcome to the webinar.
Oops.
You have entered as an attendee.
Okay, what I'm doing here is I'm waiting patiently for my setup using the moving average trendline ICT strategy. I'm trying to develop my own edge, what I like to trade with. And that's the hardest part about trading, is coming up with something that you are fond of and you love, a trade style setup strategy that you believe in. And right now I'm looking for trendline breaks to the upside that all agree that we're going up. See, this is all agreeing that we're going up here. Okay, it's coming down a little bit now. It's coming down. And on my lowest time chart, which would be my minute time chart or 1,000 tick time chart, it's going to look bearish actually. And what I don't want to look bearish is the 10,000 tick or the 15-minute chart. And what we have here is price is back above the 20 and the 50 and the 200, and it's a strong move and it's holding. So I'm looking for pullbacks to these moving averages here. And then it's going to look bearish on the 1-minute chart, of course, or the 1,000 tick chart. And I'm looking for my favorite trend line break strategies where it breaks the trend line, consolidates, retests, and kind of creates a double two-try sell patterns, support patterns, and then and consolidation, higher lows, patterns that look like it's going to break out, patterns that look like it's going to break the trend line on the 1-minute or 1,000 tick chart. So that's what I'm waiting for right now. Here's the 5,000 tick chart, and it's pulled back to the 20, pulled back to the 200. It's above all the moving averages. It's a strong move up. It looks like it wants to go bullish, right? So that's what we're watching for. But the main chart I'm trading with is the 10,000 tick or 15-minute chart. The 15-minute chart is giving me everything I need along, to tell me which direction I need to go in. Liquidity sweeps, we don't always know which way the liquidity sweep is going to go, which way it's going to go and stop out the stop losses. We can have a guess, but I'm just going to follow what it's been doing, and what it's been doing, a lagging indicator of the moving averages. It's been going this way, so more than likely it's going to sweep these stops up here. These are the areas of liquidity that I think it's going to go to. All right, so I'm following the 15-minute chart. I'm following the 10,000 tick chart. They're almost the same. All right, so what am I looking for? I'm looking for trend line breaks on the lower time charts. I'm looking for patterns. I'm even looking for it to pull back to possibly fair value gaps on the 5-minute chart. Here's the 5-minute chart right here. We've got the only fair value gap we have, okay, here's one right here near this dash line, even right there. That's the latest. It's already been tested off that 20 moving average. It's already been tested in that area. If it were to come down there, that's possibly worth a try. It's worth a try, but it depends on how it gets there. If it gets there in a very violent way, it's possible I could get in on that. But where's my stop loss going to be? I have to figure that out. And sometimes when price is moving fast, it's very difficult. Here's a lot of support right here at a fair value gap. Okay. So this is an area of interest right here. If I was just going to buy based on a fair value gap only, I'm not doing that though. Okay. So my strategy incorporates the direction of the moving averages and where price is, and we're bullish right now, but it also incorporates trend line breaks. Okay, fair value gap entrances are good, and if they, and I did take one yesterday that worked out pretty good, and it's possible that I could take that. So I guess what I'm trying to say is that the ICT part of my strategy allows me to take trades using fair value gaps and not only just the trend line breaks. So I need to go ahead and work that out of my rhetoric here today as I'm explaining and articulating and developing my own understanding of my edge, my strategy that I'm going to be using. I need to be able to understand all the quirks and idiosyncrasies about it. Okay, so what are we saying here? We're looking for a trend line break. We're looking for a bullish pattern to develop. We're looking for it to hit support or fair value gaps or order blocks, and we're looking for it to bounce and create a situation where we could get long. Why? Because we think it's going to go bullish. We think it's, as long as it's above the 20, the 50, and the 200 on the 10,000 tick chart and the 15-minute chart, I am bullish. When it starts to close below those, I stop looking to get in and I wait to see what it's going to do. See, right now it's coming. Right now it's coming down to those moving averages, which is where the fair value gap is at on the 5-minute chart. So it's in the 5-minute value gap right now, actually. Now it's you can't see it, but it's coming down to that, and it's passing it actually. And there it goes to the next one down, pretty strong and pretty fast. It's possible to try to buy that. It's just going so fast. Let me...
Order filled.
Okay, I'm going to try it with a tight stop loss. It's going to stop me out if it comes back down. Okay, there it goes. I'm going to try that with a tight stop loss. The reason why is that it's coming down to the fair value gap and support. It might want to sweep that though. That's the only problem I'm having with it. There it goes. Let's keep going. Break even. I'm on break even right now because it's a risky trade. There it goes.
Target filled.
All right, I hit my target on that, and that was a successful trade. I did not rely on a trend line break. Hence, the name of my strategy is moving average to get the direction and bias and where I think it's going to sweep liquidity. I want to know on all my time charts where I think price is headed. What side of liquidity? Buy side, sell side? We don't really know. So we have to rely on something to kind of give us that bias, okay? And people use it to do that different ways. I like the moving averages. If I can get all my time charts to tell me that price is on the same side, then I believe stronger that that's where the liquidity sweep is targeting. It's targeting that direction. Okay, so I'm bullish on it, but there's a chance to use some ICT strategies here. And when it came down to the support level here, the 5-minute chart, where is it? The 5-minute chart is really what got me to try to go long on that. And that's why I went long on it, because there was a fair value gap there. But now I have to be on caution, because if it didn't hit my target on that bounce, it did sweep. It would have stopped me out for a loss, and it could have easily done that. That means that was a pretty risky trade to me. Okay, I got in right on the 200 moving average. I got in on the support levels. It was worth a bounce, but it wasn't worth more than that. So that was a scalp trade, and it was a risky trade. And I don't want to take a bunch of those kinds of trades. Okay, I'm not looking to take high risk scalping trades. I want to take, now so you see, now that price is, if it closes below the 200, then I'm in a holding pattern, possibly a bearish pattern, where I'm looking to go short. And the whole thing could change from bullish to bearish real quickly. When price starts to rotate under everything and it starts to close below everything, then I wait to see what the 15-minute chart's going to do, and I wait to see what the 10,000 tick chart's going to do, because this could just simply be a deep drop and a bounce and a consolidation, and it might push right back above. So I'm not bearish just because it's pushing below the 200 and the moving averages on the 15-minute or the 10,000 tick. I'm not bearish as soon as it goes through. It's got to go through, and it's got to consolidate, and it's got to continue, and it's got to drag the moving averages with it, and then my bias changes. Right now I'm still bullish. Why? Because the 15-minute chart and the 10,000 tick chart are telling me that things are wanting to go above and push forward and get higher. So this is what I'm watching. 15-minute chart seems to be, for me, the best view. Right here, you see how it's up above? It's slamming, price is slamming down into, this is the 15-minute chart. So I'm using the 15-minute chart and the 10,000 tick chart to give me the direction. To me, they're very similar. I used both of those to give me the direction I think price is going to go. Okay. And we're going to be watching for price to develop here, and I'll keep making this video until the close of today's session for me, and updating what happens. Okay, I'm taking a second trade here. Hopefully it's thought out properly. Let's go back over to the 10,000 tick chart. The bounce and the confirmation that's possibly going bullish in a bullish kind of direction with all the other it bouncing off of the moving averages and breaking the trend line. I really missed this break right here, but it was a momentum trade. And even now my stop's pretty darn close. I'm wondering if it's going to stop me out here or if I should have put my stop down here. I guess I'll find out because I'm not going to move my stop. Stop could have been down below this pivot down here, which would be below the 200 moving average again. I did make a higher high. This might be the more smart place to put it, but my target would have to be a lot higher as well. But the point is, it broke the trend line. It's consolidating. It's looking like let's see right here. Yeah, this looks like a very nice pattern, head and shoulders, order blocks kind of thing. But the thing is, if it comes below this consolidation area, it's just going to stop me out. So I'm hoping that this momentum stays going. I'm going to keep my stop right here. And win or lose, I can't get out of this trade. Target's up here at this pivot right here, near this pivot area right here. So we'll see if it makes it or not. What I'm interested in doing today is holding the trade until it plays out. Okay, I can't get out of the trade early. Okay, I like the way it's looking good momentum, looking bullish. But my big problem is I have not been holding the trade. I've been scared to lose. I wanted to break even as fast as possible. And in this particular trade, I win if I hold it. There it goes. If it stops me out, I do not care because I have to hold the trade. I have to hold the trade. And I'll be very careful to enter in any more trades, or I'll think about my stop loss, a lot better. It's definitely possible that I could have had my stop loss lower. And we'll see how this trade plays out. It's close to stopping me out right now. And we'll just see what it does here in just a moment.
Stop filled.
Stop is filled. Okay, that's fine. I got to get past the fact that it's aggravating. I got to get past the fact of losing trades as part of the program. This is a good try, in my opinion. Consolidation area, and look, it just ticked out by one tick. So let's see. I'm interested to see how it eventually works out. That's going to help me understand in the future when I see these kinds of things take place. And like I said, it may be that I'll learn that the stop loss should have been lower and the target should have been higher. So let's see how this ends up going. Okay, what I'm learning often is that the consolidation entrance can be early. If it works, great. What I've noticed a lot is that it pulls down and it continues up. First of all, that stop loss down here would have kept me in the trade. Let's make a note of that right away. Secondly, I should wait for the pullback, but I don't want to miss the trade. I would have gotten this trade. This trade would have been a beautiful entry. It followed the trend line strategy. It's just, there's different ways of getting the trend line strategy. You can go for a momentum trade right off the get-go on the first candle. You can wait for a consolidation. You can wait for a retest, I just got in on the consolidation one. And so that's what happened. It looked like it was a good trade. It just wasn't the right timing for that particular trade.